Chartered, your accounting tutor. In today's video, I'm going to still continue from where we stopped or where we have been learning double entry system of bookkeeping. And today I'm going to give more illustration to clarify how transactions of a business are being posted using the ledger account via the principles of double entry. Now let's look at the entries we have today. As you can see on the 7th to 11th, these are different entries that learners are always challenged how they are posted in ledger. I'm going to address it today. The first one says that bought goods on credit from ABC Limited 40,000. Bought goods on credit. So here, as you can see, I emphasize that in accounting, bought goods here means purchases. Mind you, the emphasis is for you to know the receiver account and the giver account. Why the principle say that debit the receiver account and credit the giver account. That is the emphasis. So if you really want to get it right, in any given transaction, you must identify the receiver account and the giver account. So in this case, bought goods means purchases. And then the giver here is ABC Limited. But the confusion here is that we now say bought goods on credit. If I'm buying goods on credit, it means cash is not involved, neither bank is involved. In this case, you now know that both goods, if you're buying goods on credit, you are not giving cash, neither you are giving a check. So in this case, somebody must give you a good, or an opposite must give the good. So here, the giver account is ABC Limited, while the receiver account is purchases, meaning you are ABC is giving you goods which are referred to as purchases, while purchases is receiving. Let's see how we record it. In this case, you discover that you start with the giver, and the giver account is ABC Limited, meaning the ABC Limited is giving goods. And then on this fateful date, 7th of 4, 2026, ABC Limited is giving purchases worth 40,000. They now come and open purchases account, which is the receiver account, and I said purchases is receiving goods from ABC Limited worth 40,000. So in that case, this is credit and this is debit, the giver account and the receiver account. Let's look at the second illustration where it now says sold goods on credit to Mr. 120,000. Here to try to identify the giver account and the receiver account. The giver account here means sold goods, which we refer to in accounting as sales. Sales is what we are giving out. The goods giving out are referred to as sales. The goods being sold are referred to as sales. So what you sell or the goods you give out is referred to as sales. Sales become the giver account. Remember, emphasis is for you to know the receiver account and the giver account in every transaction and every problem is being solved. Here, sales is a giver account because the business is giving out sales. Giving out sales to who? It's not giving out sales to receive cash, neither bank. So in this case, somebody is giving out the goods, and that is Mr. Onduna. So here, Mr. Onduna becomes the giver account, while sales, so the sales become the giver account, while Mr. Onduna becomes the receiver account, I mean to say, because sales is giving, while Mr. Onduna is receiving the goods that have been given. Let's look at how it is posted. Here, you always start with the giver account. The giver account is sales. I will now say that sales is giving to Mr. Onduna, and the value of the sales is 20,000. You come and open Mr. Onduna account, which is the receiver account. In this case, Mr. Onduna is receiving sales from the business worth 20,000. Mind you, Mr. Onduna is like the trade receiver, is like a debtor to the business. We are coming to that. I will explain better in the next illustration here. We now say bought goods on credit 10,000. Here we are saying that bought goods here means purchases. As I say, it means purchases. Why the name of the person giving the goods is being withheld. Just say bought goods on credit. Bought goods on credit 10,000. As well, the business is buying goods on credit, and the name of the person the goods are being purchased from is not mentioned. Here, don't open credit account. Don't open credit account. What you need to open here is trade payable. Initially, trade payable was called creditors, but the correct name based on International Financial Reporting Standard now recommend that trade creditors should be called trade payable, meaning as you purchase goods on credit, you have the obligation to come back and pay the goods you purchased. So in this case, purchases become the receiver account, while trade payable become the giver account. Please don't use credit account. There's nothing like credit account. The right account here is trade payable. Neither you use creditors, because creditors is the old name, and the name has been changed by International Monetary Reporting Standard to represent trade payable. So here, trade payable become the giver account, while bought goods, which is purchasing, become the receiver account. So let's see now. I'm not saying that. Always start with the giver. The giver is trade payable, which I'm saying don't call it creditors. Now, trade payable on this faithful day, 9th of April 26, trade payable is given to purchases, and the amount is 10,000 naira. We are not saying that trade payable must be a name of the person, but here the name is withheld. So anytime you are buying goods on credit, the name is withheld. Please, the right title is trade payable. I'm still emphasizing. Now we are saying that trade payable is given to purchases 10,000. They now come to purchase account and says, on this faithful day, 9th of April 26, trade purchasing, which is the receiver account, which is what the business is receiving. Mind you, I am still emphasizing that the receiver account is what you receive. Trade payable give and purchases is received by the business through trade payable, and the amount is 10,000. Now let's still look at this in terms of sales, where the name of the person selling the goods is withheld. He will not say sold goods. Sold goods here means sales. Mind you, I want to give a simple principle that you also hold on it to be able to understand it. Anywhere you see sold goods, it means sales. All sales are credited. All sales are credited. Why? Sales are givers. And we say that credit the giver account. Credit the giver account, meaning the giver account must be credited. So anytime you make sales, you are giving out goods. And as we are giving out goods, it means sales. Sales is the giver account and it must be credited. Likewise, bought goods. Bought goods is a receiver account, meaning anytime you are buying, you must receive the goods. And as you are receiving the goods, it becomes the receiver account. And that is why we now say that all purchases are debited because they are receivers, while all sales are credited because they are givers. Let's continue. Here we are saying sold goods on credit. Here means sales become the giver account. Then, who is receiving? The name is being withheld and is credit. Please don't use credit account now, repeating. Here, you are not going to use trade payable. You use trade receivable. Trade receivable. Why are you using trade receivable? You are using trade receivable because as you give out sales and the value is 50,000, the business is expected to receive value. Receive value. And as you are receiving the value, that's why we say trade receivable, meaning trade, as you trade, you are able to receive value, and that value becomes trade receivable. A value is going to receive as a result of the trade, and that's why it's called trade receivable. A value is being paid because of trade payable for the purchases that was taken from any organization. So let's say I will record this, and we are saying here, the giver, always start with the giver. The giver is sales. The giver is sales. Look at it. Sales is a giver. What you are giving out, the goods you are giving out are referred to as sales, you are selling. So in this case, sales on the faithful day, 10th of April 26, sales is giving out trade, is giving out to receive value from the sales, and the value is 50,000. You now come to trade receivable. Trade receivable become the receiver account, and we now say that trade receivable is the receiver account is receiving from sales. That is, this value is coming in as a result of the sales that the business has done, worth 50,000. Please don't use debtors. The old name was debtors, but the new name is trade receivable based on International Financial Reporting Standard. The new name is changed to trade receivable. Then finally, let's come back to the last one, which is paid wages. Paid wages here. Then here to try to identify which account that receive and which account that gives. Mind you, if you want to pay wages, you must give out cash. You must give out cash. The cash become the giver account. Then the receiver account become wages. Wages is services. Wages not tangible as in case of goods. Wages is services. But all we know that as you are giving out cash, you are going to receive services of somebody performing wages for you, or somebody doing wages for you, and wages become the receiver. I want to clarify here with emphasis that All services received by the business should be debited because the business give out cash or give out a bank transfer to be able to receive services. What are the services? Services such as wages, such as salaries, such as insurance, such as electricity, such as printing, and many others. So I want to categorize and say that all services paid by the business are debited because the business is giving out money and the services are being received. Mind you, I'm still repeating, services such as wages, insurance, electricity, printing, transport, and all kinds of services that the business receive as a result of making payment are debited. Then we conclude that all expenses are debited. All expenses paid for are debited. So let's continue. Here we are saying that cash is giving, credit the giver account. Cash is giving. They now come here and say this is our cash account. Cash account is giving to services of wages worth 7,000. They now come to the receiver account and say that all expenses are debited, all services paid are debited. Now open wages account and now say wages is receiving from cash 7,000. The wages will be debited. This is the giver account created, and this is the receiver account starting in place of any services received, be it insurance, be it a salary, printing, transport costs, telephone, and all those services. Please debit them because they are what? Receivers. Thank you very much. Watch me in the next video. If you have any question, you ask me in the comment section. I will address it in the next class. Thank you all. Next class.